What's going on, guys? Welcome back to another episode of the Desi Faceless Technical Analysis on a Sunday afternoon. We're going to go ahead and try to finish this before the Giants game. Giants game is around 4:30. Expecting a loss there, but that's okay. We're still going to support. What's more important is the Mets game that's coming up. But anyways, you guys don't care about that. Let's jump into the technical analysis. Let's jump into the SPY, the ES futures, the QQQ, and the NASDAQ futures. After we get a good review of all of that, and you can probably hear Liam dancing around in the background, we're going to go ahead and look at some really interesting setups on some individual equities, and hopefully all of this together will give you guys a good head start into the next week of trading. So let's go ahead and start on the S&P 500, the SPY ETF, and where I want to start is the longer term picture. I want to start on the daily chart, and then I want to break it down onto the 4-hour and get more minute as we continue. So the first thing I want to talk about here, guys, is this S&P 500 ETF. And the most important thing for me here, guys, is that the S&P 500 was able to defend above the previous all-time high, which was $565.40. That was the exact previous all-time high right here back in July of this year. We tried to get back above that area here back in August into September, and we failed. Obviously, we saw that deep pullback back into that 540 level. Now, you guys can see around that 540 level, it looks like we developed somewhat of a higher low, and we pushed to the upside once again, holding that previous very key demand, pushing off that 540 and also that 100 SMA. This time around, as we approached that 565.40, which was that previous rejection point, we were able to break above this level. Now, the most important thing that we saw at the end of last week was the hold right here above that previous high. To me, us creating a new low above this previous double top rejection point, in my opinion, is still very bullish. Now, we can see we closed on a very strong daily hammer, and we held beautifully above that 20 SMA and that 565.40 level. So when we think about the bigger picture here on the daily chart, this is without a doubt still a very bullish daily chart, and I would assume, can see more upside as long as this holds. Now, the picture that starts to, the picture that's painted here, I think is extremely bullish, but when we go down to the shorter time frames, which we're about to do momentarily, things are still a little bit questionable. You want to trust this daily chart, and you want to trust that longer term picture, which I think is still the right thing to do. But when we talk about short-term expiration options, when we talk about short-term trading, it was not as easy as it looks here on the daily chart all of last week. So what I'm going to do now is I'm going to break this down to the 30-minute chart, and we're going to go ahead and look at last week of trading, and we're going to break down some short-term levels. And we're going to talk about what levels need to hold, what levels need to get above for us to really think that this is going to continue higher. So quickly, I'm going to switch over to here, and we can see those short-term levels appear. You guys can see right here on this 30-minute chart, this was that key demand hold that came in. This was the must-hold level, which we can see held all of last week. Now, we can see all of last week, even though that hold did come in, look at that intra-week price action, right? Very, very up and down, very choppy. And the upside continuation trades, even though that downside demand was holding very strong, did not really present themselves. It was a week of consolidation, a week of really sideways action, and really just scalps off the 570 supply and longs off the 565 demand, right? So really just a 5-point range all of last week, which when you think big picture is still, of course, very bullish in my opinion. The only time you want to get bearish on this market is the break of that 565.40 and the break back under that 20 SMA. That has not happened yet. Now, we can see here on Friday, which I think is the most important day to talk about, we were able to hold above that 570 level. We can see this 570 level was some previous very important reactions, 570, 570, 570, 570, here 570, and all of last week before Friday, we saw the SPY fail at that 570 level. If we go ahead and drop down to the 15-minute chart, we can see that 570 level actually turning into a very strong hold towards end of day on Friday. So in my opinion, that is a good bullish structure there. And as long as that SPY can now develop a new low over 570, then I think you are potentially looking to structure higher here on the S&P 500 ETF. So next week, we need to see the bulls really defend that 570 level. If we do flip back under that 570, then I think you probably will see that weakness come in again, and you will be right back in this channel that you were trading in last week. So 570 to me needs to be the new low that is formed on this SPY for us to see that upside continuation come in, and for that long-term analysis to really continue to set up. Now, the level that's above is extremely clear, and you can see this right on Friday, the level that we actually double topped at, and that was 573. This was the exact level that we gapped up in the pre-market due to non-farm payrolls and heavily rejected. And we can see, end of day on Friday, we went ahead and tested that level again, creating that double top at 573. Now, if I go back out to the 30-minute chart, we can see why 573 is important. And zooming in on this 30-minute chart, look over to the left. Right here, 573 is a major level. It was a previous major rejection, and we can see again 573 right there. So it's very clear now that this week approaching, we need to see the S&P 500, I believe, stay above 570, but we also want to see this get over 573 to think that upside can continue. Because what we could see next week, which is what we saw last week, is possibly another small range and possibly another trade within this 570, 573, where it was previously 565 to 570, right? You can see these two channels that could be created. Right here could be our new channel of the week. These are definitely our goalposts, our guardrails of this upcoming week, 573 to 570. If we do fail back under 570, then I think you see that downside move. If we get above and hold above 573, then I would assume you're going to see all-time highs at that 575. So I think it's very clear here heading into next week what levels we need to watch. It's right here at 573, which is that double top high that was created on Friday, and it's right here very clearly at 570, which was that previous week's highs, right? That previous high of last week before it was able to be held as new lows on Friday afternoon. So 573 and 570, very clear here heading into next week. Let's make sure we watch those levels. And I would once again just reiterate that when we zoom out to that daily chart, as long as we're above that previous all-time high, I still believe this market is building for a strong move to the upside. But we are going to have to, as always, pay attention to those short-term levels on the intraday trade. And for now, that is 573. All right, guys, so heading over to the S&P 500 futures, that daily chart, let's start on the daily chart. Let's talk about the big spot. And I believe right here is the big spot. It's 57.27, 57.30. You can see those previous major daily highs right here that kept this S&P 500 futures lower back in August of this year. And then we can see right here, right last week, look at that hold that came in at that 20 SMA and right above that previous rejection point. That right there is a beautiful looking break and retest setup, previous highs into new lows, and that is definitely something that I would continue to monitor and make sure you understand on the larger picture time frames. That is a very important hold that the S&P 500 futures created there. Now you might be asking, hey, what about this high over here, that 57.80, 57.78? Let me go ahead and go into our short-term levels, and we will talk about that 57.78 momentarily. If we go into our 30-minute chart, let's go ahead and take a look. Actually, you know what? I think we're going to go hourly chart, and we're going to get a little bit more time here. Let's go to that hourly chart. Let's take a look at that shorter-term area, and let's take a look at that 57.78. So we can see right here, right, that 57.37, 57.25 area, that is definitely where that demand held true last week, and we saw that push come in towards end of week on Friday. Now we can see right here that 57.78, that previous high on that daily chart, was definitely an influential area. We can see there were some rejections here, there were some holds here, there were rejections here on Tuesday of last week, and we could not get above that level pretty much the entire week until Friday afternoon. So for me, it's anywhere between that 57.78 and possibly down to around that 57.70. I think it's a little bit of a range there. And so for that reason, I'm going to keep this as a range. And I'm going to tell you exactly why I keep that as a range. Because I do want to include some of these previous highs. So you can see right here on the 30-minute chart, I still want to include some of these previous highs right here. I believe if that ES pulls back, even if it pulls back and still holds that 57.70, which is these previous highs right here, I still think that's an area you want to pay attention to as a potential hold spot. So anywhere between that 57.70 to 57.78, I think is where you need to see that S&P 500 hold strong on any pullback next week. If we fail back under that 57.70, fail back under that Thursday high, fail back under that Wednesday high, and start to see rejections set up right here, then that to me would be a fail and a move potentially back lower into that large daily chart demand down at that 57.40 zone. Now to the upside, we can see very clearly the 5800 level on the S&P 500 futures. So going back to that hourly chart, go ahead and take a look at this. Look to the left. If TOS allows me to zoom in, 1 second here. Zooming in on the hourly chart, we can see how crucial right there at 5800 is. 5800, 5800. That is going to be the must break level next week on the S&P 500 futures to get upside continuation. If we can get above that 5800 and hold it like we held back here, like we held here, if we can turn this into a new hold at 5800, then I would assume that you're going to see that push towards all-time highs around the 5820 to 5830 area. So next week, the guardrails are pretty clear on the ES, that 5800, that 5770 to 5778. These are the areas that I want to see the market hold or break above for more upside action. If we go back to the SPY, we can see how clean that is with the SPY. It's around the same exact read. We can see there the 573 and the 570 lining up pretty much perfectly with that 5800 and that 5770 to 5778 zone. So big watches there on both the ES and SPY. With that done, let's go ahead and move on to the NASDAQ futures. All right, guys, so we are now on the 4-hour chart on the NASDAQ futures, and the key hold that came in last week was right here. It was right at that 19,800 level. This was this previous high right here at 19,800, some of these previous lows at 19,800, and we can see all of last week that NASDAQ future just would not break below 19.8, held above that 20 SMA, held above the 100 SMA. That is going to be the line in the sand in the short term for me. As long as that NASDAQ's above 19.8, I do believe that those bulls are holding this market higher. A flip back below 19.8 would definitely show us some type of weak action. So 19.8, big line in the sand down below. Very important hold that came in last week. You can see that flip right there. Previous highs into lows. So that's the key for now. Now, the level that we were able to break and hold above, which was 20,050, that was sort of that intra-week level. You guys can see right here in the 30-minute chart. I believe it was around that 20,050 level. That was these previous lows from Monday of last week, which were turned into rejections, turned into rejections, turned into rejections, both Tuesday, Wednesday, and Thursday. And on Friday of last week, you guys can see right here, that 20,050 level held as a new low. So it's very clear here on the NASDAQ, 20,050, a must-hold level. That is a previous low that turned into a rejection high, rejection high, rejection high, that turned back into a low Friday after the NFP, non-farm payroll data. That is a must-hold 20,050 to create that higher low. This was your 19.8 low. This is now your 20,050 low. If you fail back under 20,050, that is absolutely your sign that weakness has come in and we are failing back under that high from last week. So 20,050 must hold for the bulls in my opinion. Now to the upside, the level that rejected perfectly to end the week last week, 20,250, and we have to go back on the 4-hour chart to see how important that 20,250 level is. So if we go on this 4-hour chart, we can see, let's look to the left, 20,250, rejection, 20,250, rejection. 20,250, the exact level we failed to close last week, is that must-break level. If we can hold above that 20,250, I think your next move is into that 20,400, and then finally that 20,600. If I go down to the 30-minute chart, you guys can see right here, if we can hold above this 20,250, get above this and hold it, I think you'd trade right into this 20,400, which is right there. And above that, you'll probably see this 20,550 to 600 zone get tested once again. So next week, Very, very clear here on the NASDAQ futures, 20,250. That is the must-break level for the bulls. If we see failures there, we're likely to get that test back at 20,050. If we get that test back at 20,050, that would be your potential new long spot to see if this low gets created. If you can find those longs off 20,050, then you might be able to trade that back higher into that 20,250 level. But if we get this failure at 250 next week and we see that downside and those bulls do not step up at 20,050 and we fail back below, that would be the rejection play that would take us back to that 19.8 low. So very clear here on the NASDAQ, I would be watching the 20,250, I would be watching the 20,050, and of course that 19.8 low. NASDAQ futures, I think pretty clean there. Let's move on to the QQQ ETF. All right, guys, so here on the QQQ ETF, on the 4-hour chart, the key hold that came in, which was right here, right at that 478, 476 previous rejection spot. You guys can see all of last week, we held above that level. That is the line in the sand. That's the must-hold level, right? That is the 19,800 on the NASDAQ futures. You can see right here, that 19.8 on the NASDAQ futures. That equals our 476, 478 zone on the QQQ. Must-hold, line in the sand. That is the level to watch, and that is your daily 20 SMA. Now, if we go out to this 4-hour chart, we can also see this 483 level show up, and that was that 483 level that we could not get above last week until Friday. Here on the 1-hour chart, we can see 483 reject, 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 which was that previous low from Monday. 483, 483, 483, 483. Now on Friday, we can see the bulls were able to defend that level and buyers stepped up above it. So now we are looking to see, can that 483 level turn into a new low? If the 483 level can turn into a new low, we would be creating a higher low above last week's highs. We would look for that market to maintain above that 483. That I think is very important all of next week. The 486 level here I think is important as well, and we have to go to this 1-hour chart on the QQQ. Go ahead and take a look to the left. 486, 486, and look at where the markets are closed above on Friday. So that is quite interesting for me on the QQQ. I am definitely going to watch whether the QQQ can turn this previous high right here into a low next week. If that QQQ can defend that 486 level, then that could be something bullish to be paying attention to. If we do not hold that, then we're okay to see that move back to 483, but that's definitely going to be where you want to see those holds come in. If we fail this 486, move back to 483, but don't see the bulls step up here and we fail back below it, that would definitely be a concerning move for the bulls. You have to hold, in my opinion, above 483. You have to see some type of a higher low get formed here in the short term. Now to the upside, the level that I am concerned about is this 489.50 and this 491. Let me go back to the 4-hour chart and you will see where that 489.50 and 491 level come from. We got to go all the way back here. This is back in June. I think that's June. Yep, that's June 20th at 489.50. We can see right here, look at the high. This is the exact high of 489.36, but that 489.50 level, if we go to the short term, was also a little double top rejection here. This is right back from Tuesday of last week, 489.50. That is going to be the level that I am cautious of on upside on the QQQ. So here on the QQQ, some things that I'm definitely going to be watching. Number one is that 483 level. Can that stay as a new low? Can the bulls continue to defend? What does this 486 level show us into early next week? And if we get a push to the upside, I am definitely cautious of some fading moves up towards that 489.50. Now, if we do get above that 489.50, I still don't think it's free and clear because of this 491 level, and that goes back on this 4-hour chart. If we go here, we can see this 491 level right here, this 491 right here, and if we go into the short term, the 491 level was a pretty aggressive smackdown spot right here Friday of 2 weeks ago. So I think anywhere from this 489.50 to 491 could start to get a little bit heavy if we get an extension into those zones. I think the most interesting trade for next week is going to be that pullback long, maybe back by that 483 or that 486, and then also we can look to fade that 489.50 level on any type of straight up move. We can look to see if there's a fade that sets up there. So before we jump into some individual equities, I will give the IWM a little bit of time here, and the key thing that I'm watching in IWM is this 215, 216 level. You guys can see this very major 215, 216 level held again last week after creating this sort of downtrending move, a pretty controlled pullback right into that 20 SMA and right into that 215, 216. That actually looks quite interesting, but for me to be confident on upside, I think you want that IWM over 221 and possibly even over that 222 area to really think that this is going to break out and continue. I think it's a very interesting hold at 215, 216, that 50 SMA, that 20 SMA, we can see here on the hourly chart, that definitely stepped up towards end of week. However, take a look at this level, right? That 221. That's still under there, and there has to be some concern of that level still failing, and us pretty much just living in this channel on the IWM. So guys, we're going to jump into a few individual equities. The first one we're going to talk about is Tesla, and the reason we talk about Tesla is because I really like the recent pullback that we have seen back down into this 236 and this 20 SMA. This was a very clear previous high on Tesla. You can see those rejections that came in. Now, on this recent pullback right here, we can see that that pullback came right back to that 236 level and that 20 SMA, and we definitely saw some buyers step up, possibly a very interesting break and retest long for more upside. Now, the key level that I will be watching like a hawk next week is 250. If we can see Tesla get above 250 and maintain that level with strength, this should be a very aggressive trade back to the upside, back towards that 259, 260 area. This is a straight down move on Tesla, and I think if you can solidify a new low above these highs and solidify that new low right here above 250, that should give us an opportunity to long in this zone right here. This is going to be a must watch for me next week at 250. If we fail it, which I wouldn't mind, if we fail this and move back down to that 245, this could actually be a very interesting inverse head and shoulder right here, right? So what you might want to look for next week is maybe that 250 failure, get us back down to this 245 spot, create this inverse head and shoulder, and then look to see if those longs set up off 245 for that full move into 260. Very interesting here on Tesla. I would be watching this very, very closely. The next chart I want you guys to pay attention to here is AMD. And AMD, a really strong comeback semiconductor recently, just created one of the cleanest break and retests here on the 4-hour chart. We can see a major previous high here on AMD, and look how beautiful the holds came in above that 158.50 last week, and that move that came in off that level, very, very aggressive. A beautiful break and retest right here of this level, break, retest, and look at the reaction off that spot. Now, typically, I would want to be long here, and this trade does feel a little bit far gone, but the reason I'm still interested is take a look at this yellow zone above, and that yellow zone, guys, is a daily chart gap. We can see here on the daily chart, there is a gap right here up into around that 174.50 level, and that is definitely something that's still interesting. If we go down to the 30-minute chart, what we're going to be looking for here, in my opinion, is a pullback to these previous highs, which is right around that 169 level. You guys can see right here. Let's get a pullback to this 169 level. See if AMD can hold that level, right? If AMD can create a new low here at these previous highs, then I would look for that potential long entry for that full gap fill into that 174.50, 175. Now, if we get above that 174.50, 175, then I don't see why AMD doesn't continue this very strong move up into this 184, 187 high. This is a very interesting chart on AMD. This is a very important hold at 158.50. I would absolutely be paying attention to this gap fill potential on AMD. If it does break back under that 169 level, I would also be watching these previous highs around 165, right in this general area, for that potential pullback long as well. You can see right here at 165, we had this previous high, this previous high. This could also be a little pullback and long to be looking for that pushback to the upside. I think AMD had a lot of juice to end last week, and I would definitely put it as a top candidate to watch into next week. All right, guys, so the last individual equity we're going to talk about here is Amazon, and this is another nice structured pullback into previous highs that I want to show you. We had some very clear previous highs here on Amazon around $182 that over the last few days we have pulled back into. We can see that pullback that was created right here back into these previous highs, and look at how it was defended. We can see that close higher off of last week. So as long as Amazon's above that 182, I still believe this is a very interesting break and retest candidate. I would be watching to see what happens here. Now, the level that clearly needs to break and we need to be careful of is right here at $190. That is definitely a potential high, a lower high that could create itself, that could cause downside. So I'm not so sure I would be taking action on this one right away. I would probably want to see 190 get back above, and if it does, that would be my action spot. That's likely off of market strength, and that would be the spot I'd look for that new long. You can either look for that pullback and maybe double bottom low here at that 182, or I would look for the move over 190. If you are going to trade Amazon, just make sure you're aware of 190. This could be, and if we see market weakness, this could be a lower high forming. That is something to pay attention to as well. So guys, that's going to conclude the analysis here on this Sunday evening. I'm going to go ahead and watch that Giants game. Probably watch them lose today, but that's okay. We will be back for all new analysis every single morning in the pre-market on the YouTube live stream. It's completely free. It starts at 8 o'clock every morning, Monday through Friday. Come join us. Early morning analysis. Prepare for your day. I would love to see you guys there. Press that like button, subscribe to the channel. If you want to trade live with me on a daily basis, check out those links down in the description, and I will see you guys tomorrow on the live stream. Peace and love.